Welcome back. You're watching Moneycontrol live stream, and you are watching Closing Bell with me, Nandita, Khemka, and my colleague here, Yatin, Mota. Yatin, we have managed to come off the day's low, and in fact, we staged quite a smart rebound today to end above that 19,800 mark. Even though the advance decline ratio was still in favor of losers, but we did manage to, close on a high. In fact, at the high point of the day or thereabouts. It was a nearly 100-point recovery on the Nifty. Broader markets, however, ended the day, in the mixed zone. The Nifty mid-cap index managed to eke out gains, but the small-cap index was down over a percent or thereabouts. Autos, FMCG and IT, these pockets managed to make a comeback, and on the back of that, we saw the Nifty edge back into the green. Realty and banks, of course, were under pressure today, and if you look at the individual movers on the Nifty, the likes of BPCL, NTPC, Cipla, Power Grid, Infosys, as well as Bajaj Auto. On the flip side, IndusInd Bank, Kotak Bank, M&M, Adani Ports, and Hindalco, these were some of the losers in trade today. But of course, Yatin, today quite a few movers in the mid and small cap end of the markets. We'll talk about that. But Tata Tech IPO, it sailed off. In fact, it's sailed through on the first day itself. Within hours, it was oversubscribed by nearly 2 times, and at least at the I think by 3 p.m. or thereabouts, it was subscribed over 5 times the shares on offer, Yatin.
Clearly, and I think Tata Group's first IPO in 20 years, and probably the excitement in the investor community. In the past, we have seen that the Tata Group IPOs and the companies which hit the bourses clearly create a huge amount of wealth for the investors. And when it comes to listed peers, probably like Tata Elxsi or for that matter KPIT Technologies, I think the pricing of Tata Technologies has been kept quite vibrant, and probably there is a lot of institutional interest and also a lot of retail interest, and hence Nandita, in the first few hours of trade or rather bidding, the IPO got subscribed, and not only subscribed, it's almost 4 times end of day one.
Right, that was about the Tata Tech IPO, Yatin. But of course, you had the likes of CG Power. That stock hit upper circuit in trade today. We'll be talking about the reasons as to why it was upbeat in trade. But aside of that, what were the other movers that you were spotting in trade today?
So, we had stocks like, Tube Investments of India, Carborundum, Universal also taking a rub off from the gains that, were made by CG Power. But SW Solar, that stock was up 5% after, bagging in a big contract from the Nigerian government. Obviously, this announcement came a few days back, but I think the company also should be announcing this particular EPC project in which they are expected to get double-digit margins according to a story filed by CNBC TV 18. Apart from that, we had BPCL. The board will consider interim dividend. Obviously, the oil marketing companies were focusing on their profitability, but I think the dividend portion is probably the icing on the cake, and hence the market was excited. Stock got a 4% rally given the fact that the board will consider dividend. Not only BPCL but HPCL, IOC were also the other stocks which gained momentum in trade. Aurobindo Pharma stock is hitting a multi-year high. That stock was up 3%. Natco Pharma, Aarti Drugs were the other gainers in the entire pharma space.
All right, on that note, let's take a look at the top stocks that were on our radar this afternoon. Of course, no points for guessing. CG Power is one of the stocks that is on my radar this afternoon. Given the fact that the stock has rallied 20% in trade today on its plans to set up a semiconductor assembly and test facility, and it has sought the nod from the IT ministry and filed an application for subsidy as well. And the estimated investment for this project, of course, will be somewhere around $791 million, I beg your pardon, and it will be spread over 5 years. And the project will be funded via subsidy for which it has already applied, and as well as the JV partners equity contribution and debt as well. The JV unit will be set up in partnership with tech providers as well as anchor customers. And if you look at CG Consumer, the earnings were pretty good. If you look at the profit, the second quarter profit had nearly doubled. It had in fact also made some capex announcements when it comes to the switch gear segment. Right, the company had also retained its FY24 revenue guidance of 7,000 to 7,005 crore rupees or there, 7,000 to 7,500 crore rupees or thereabouts. In fact, let's talk about the semiconductor plans of companies after the semiconductor mission that was launched in 2021. Quite a few companies have been looking to jump on the bandwagon. Right from Tata's, the Vedanta, you had L&T as well. Come out with plans. In fact, it had announced its plans to enter into chip design, not manufacturing, because of course that is a much more capital intensive side of the business. But when you look at chip design, of course, that's more more cost effective. And that's why L&T has also kind of announced its plans to foray into the semiconductor part of the business. But aside of that, let's see how this this whole foray into semiconductor pans out for CG Power. This is the buzzword now, and a lot of companies, as I mentioned, are looking to jump onto this bandwagon. But if you look at the return on equity for a stock like CG Power, Yatin, it has the stock itself has rallied 72% on a YTD basis, and return on equity is in excess of 50, which is 50%, which is very pretty healthy. And going forward, let's see how this pans out. But for now, looks like the going is pretty good for CG Power.
Clearly, CG Power, that stock in focus from the Murugappa Group, and not only CG Power, but as I mentioned earlier, Carbon and Universal Tube Investments, all of these stocks in the group, or rather the holdcos, were doing well in trade. But let's shift focus from semiconductors to autos, and M&M is in focus after HSBC has been slightly skeptical on the tractor growth story. Now, HSBC has a buy call on M&M with a target of 1800. However, they have a reduced call on Escorts on valuation concerns with a target of 2500. According to HSBC, FY25, which means the next financial year, could be quite troublesome for tractors volume growth, given the fact that for the last 1 decade we have seen a very strong double-digit growth for the tractor volume business. Given the fact that the rainfall this year was patchy, the tractor sales also have been slightly wobbly, or rather granular in that matter. Probably brokerages now are estimating that moving ahead in the medium to short term, there could be some pain for the auto industry in the tractor segment, given the fact that the penetration has been quite deep, the tractor sales have been quite good for past many years, and now on a cyclical basis probably FY25 looks slightly weaker. In fact, the healthy return ratio warrants higher valuations despite cyclicality, but that is in the case of M&M. For Escorts, I think there is skepticism by HSBC, but it needs to be seen that how really M&M really takes the tractors segment moving forward, because they have recently introduced low horsepower tractors in the markets wherein they were not present, number one, and number two, they are also looking at electric tractors as a prototype which will be introduced in the markets on a larger scale moving ahead. So that could provide some bit of momentum in volumes for M&M, but Escorts probably on the valuation front and on the higher competition from M&M looks slightly weaker to HSBC.
Right, and I think we've already discussed it a few times that the going for the tractor makers will also depend on how the rural recovery really pans out going forward, right, Yatin? But on that note, the other stock on my list today is also from the auto space, Tata Motors. Now, this stock has hit a fresh high in today's session, even though it came off after that. CLSA has a buy rating on the stock, target price at 841 rupees per share. In fact, CLSA has cited the healthy performance by JLR as a reason for increase in target price as well. Double-digit growth in JLR's retail volumes in October came in at 14.5% or thereabouts. In fact, volumes have also been surging both in UK and EU. In UK, the volumes have surged by over 65%, and in the EU, the European region, it has gone up by 29% or thereabouts compared to the last year. Net debt at JLR has also been reduced by £300 million, and that comes as a big positive given the fact that the company is looking to shift to net cash position by FY25. Of course, the reduction in debt will bode well for Tata Motors as a whole, even when with respect to the stock prices. Management, in fact, if you remember, had raised its FY24 guidance from 6% to 8%. Stock, of course, has rallied nearly 72% on a YTD basis. In fact, it is one of the best performing stocks on the Nifty on a YTD basis, and with this positive view coming in from Tata, from CLSA on Tata Motors, looks like it's going to be a smooth ride for the stock going forward, Yatin.
Absolutely, and Tata Motors anyways is in focus given the fact that Tata Technologies IPO is clearly doing well in the marketplace.
That's true. Well, those were all the stocks on our radar this afternoon. With that, we've come to the end of this edition of Closing Bell. If you have any observations, leave them in the comment section below and we'll take note of them. But for now, it's a goodbye from me and Yatin. Thanks a lot for tuning in. Stay tuned to Moneycontrol for all your other news and updates.